Good morning, everybody. Happy Wednesday. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you as always. Did you guys see what was happening after hours yesterday in some stocks? Because there were some things happening, some stocks making moves. We're going to talk about that. Gamestop, AMC. Just confirming that we're live right now for 1 second. I'm confirming that we're live on Twitter, on Facebook. We are live. Okay, we're all live. All good to go. Even though I'm not seeing us on YouTube. Let me do a refresh. All right, I think we're good to go. Regardless, we got a big show today. We're going to talk about the meme stocks moving after hours. Jonathan Corpina is our guest, Meridian Equity Partners. Looking forward to that. So smash that like button, and here we go. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Let's bring on Mr. Joel. Joel, good morning, and let's get your choice. How are you doing?
Hump day, Wednesday, right? Wednesday, March 23rd. Is it spring?
It is spring.
Days ago.
The first day was what, like Monday or Friday?
Yeah.
It is spring.
Happy spring.
Happy spring to you.
What happened to the spring in the market? What you do, Spencer?
It can't go up every day, Joel.
Now, 5 out of 6 days we've been higher. The one down day was Monday, and that was just a smidgen here. So we're a little jeopardy of losing that streak. Today, down 19 and a quarter handles. Double top out there for you pattern traders, 14.75. The high yesterday, 14 even today. Hard to find support here
when you
charts? Had a 400-point rally.
Can I see your charts?
I didn't share them?
No.
It says I shared.
No.
Okay, there you go. How's that?
It's fun to share. There we go. It's fun to share.
Gotta learn to share. Pre-market low 44.80. Nothing for you there, folks. Intraday low from yesterday's 67. If you want to look for another downside level, crude up 296 on Titan supplies at 112.23. Gold up $7, 1928.50. That 1950 level just looks pesky. Silver back over 25, up 26 cents at 25.16. Bitcoin hovering in the 40K handle. Can't really bust through that 45.5. Ethereum futures, they're down $39.50 at 29.52. 52. Let's bring in Triple D.
I want to interrupt you. Yeah, okay, let's bring on Dennis.
You got some breaking news?
Well, no, I'm just very confused right now because the stream is working, but it's not working. Like, we're live, but there's no video.
There's no video.
I'm a little bit confused right now.
What is happening? Bring in Mitch.
What is
struggling on? You're perfectly fine, bro.
I don't have it either on YouTube.
I have it.
You have it?
Yeah, perfectly fine.
All right, on YouTube, I see it. It says waiting.
You know what? I refreshed 3 times and now I have it.
I don't have it either.
You guys need to get better internet, bro. Come on.
I don't think that's okay. All right, you know what? I refreshed and now the video is there. That was very bizarre because I was seeing that we're live, but I wasn't seeing us live on the screen. But now I see it.
You have to refresh 3 times. I did it 3 times as well. And
that was very strange. That's a first. That's a first for us here.
That's a YouTube issue, I think.
Come on, Comcast.
Could be. Anyway, thanks for the help, Mitch. Dennis, good morning.
What's up? Talk to me.
I know what you were doing yesterday. You were buying GameStop.
I actually did. I actually did trade GameStop on that headline because when I saw it, I was like, Ryan Cohen's buying, it's probably going to go up. So I've already sold it. I actually got 9 points on it. It moved pretty good last night. Yeah, but all
right. So here's the deal. For the first time, and I found this in Benzinga Pro, for the first time since December of 2020, Ryan Cohen has bought more GameStop. And I found out by going to my just PR or my SEC newsfeed in Benzinga Pro, search for Ryan Cohen. we obviously have a filing from yesterday.
Yeah.
But I was like, when's the last time I don't even know. When's the last time he bought GameStop? I'll go all the way back to December of 2020 when he bought 1.226 million
At
shares
$15.
at $15. So
What
yeah,
price did he pay for these shares?
the average price was 101.
101.
He was buying a little bit all the way up yesterday.
Oh, he bought it yesterday? Actually was bought yesterday?
He actually bought it yesterday. I have my filing here somewhere. There he is.
Who got the memo?
He bought at 96, 97, 98, 99, 100, 101, 2, or 1, 3, 4, 5, 6, 7, 8, and 8. Yeah, that's it. Great question.
Who got the memo the day before, though? Because we obviously the rest of the
2
world
days.
finds out at 5:30 last night when the filing gets filed, and that's when I buy it because it's like, wow, if he's buying it, they're probably going to keep buying this, and they did. I've already sold it. But it was up $20 ahead of it. I mean, was there another catalyst yesterday for GameStop to be up 25 points ahead of the filing of Ryan Cohen buying more stock? Or is there like, we tell all our buddies that we bought more stock? Like, I'm just, because we had the huge move ahead of this, which seems ridiculous to me.
That's the other thing. So
seems very suspicious to
me. We get these filings piped into Benzinga Pro, right? So, and the best part about that is you can see times, right? So, it's I don't know if it's like down to the second in real time, but it's pretty damn fast. Okay, so we have the filing in Benzinga Pro yesterday at 6:16 p.m. Eastern time.
Well, no, it came 5:30. So look,
came
5:30. You can see. Yeah, go further down your stream. You can see. You have it in there. The active stake.
Oh, the active stake. Right. I'm sorry.
That's when you can actually.
You're right. Sorry. 5:30. I stand corrected.
Yeah.
So
the filing's in there, but I mean that doesn't explain why it was up 25 points ahead of the filing yesterday.
Right.
So I mean, we know obviously these filings are late, but obviously there's a few people that apparently knew that he was buying it, or maybe I'm asking, was there another? I don't follow the GameStop story closely enough. Was there another catalyst that drove it up yesterday? Did somebody else say something, and it's just coincidence, or? It does appear suspicious to me that it runs 25 points, and then that night we find out that Cohen bought more.
It was trending all day. It was just
trending all day because people knew.
Yeah,
I mean,
I don't know. I don't know that. I just know it was trending all day.
I think I'll go with Lowell on this one. I mean, with bots and algorithms, it was big volume. So you get big volume, and I'm just trying to take a neutral stance here and say, well, it had 2 good days and moved off support coming into the market.
25% ahead of the filing of
I'm just saying there was volume. If you had a volume ticker on and you had an alert. Maybe people have better alerts than other people have alerts, but I'm just saying the volume on 2 days ago was 9 million. It had the 3-point bump, and then it was really quiet on Monday, only 4 million. But the volume started pumping in, and I'm just saying other factors to be considered with alerts and programs and bots and algo sniffers out there, but yeah, it's hard to do technicals on this one, so I'll take a pass on it.
Well, I mean, and then obviously I'm a relationship-based guy, so when you see GameStop taking off like this, it's probably going to start bringing up all the other meme stocks. We know there's like 50 of them. So AMC, the first one you think about, it is off the highs. The S&Ps are not helping the matter. I think if we had an update, these things would be up a hell of a lot more, but they're still holding strong considering we're down 20 handles on the S&P. Bed Bath & Beyond, big day obviously yesterday. It's given back some of this overnight rally. It was up over 25 last night, and it's given it back. And then, there's the whole is costs, another one, KOSS, huge day yesterday. Continuing a little bit here this morning. There was like Express. And then the names. I mean, we don't have to go through them all here. The pot stocks are all lifting. Yeah. It's the dash for trash. That's what we were absolutely seeing yesterday. It's absolutely what we were seeing last night. It's cooled off a little bit because the S&Ps are getting hit here this morning. So that has cooled the dash for trash off just to a certain extent. But right now, there's the dash for trash. And if this S&Ps start to turn around, they'll start dashing for more trash. So, I mean, if we start to really roll over and the S&Ps get hammered, then that trade's probably not going to work out. But right now, the dash for trash trade is on.
And it's not a great sign for the market.
Historically, it hasn't been, but who knows? I mean, this market is so difficult to call. What the market is really very good at doing is punishing the maximum amount of participants. And what we saw was, the market getting killed. JP Morgan throws in the towel. Death cross happens. Everybody is so bloody bearish a week ago on that Monday. And then they just rally them for 7 days straight, just because everybody got too bearish on the other side of the trade, and they punish all the longs on the way down. Now they punish all the shorts on the way up. They'll sucker everybody in here. We'll all get bullish, rah, back to new all-time highs, and they'll pull the rug out from under it again. The market punishes the maximum amount of participants. And again, I guess they can't hear you if we're refreshing. So
no,
yeah,
we're having
I know.
real
Yeah,
trouble
just
with YouTube this
mentioned
morning.
People can hear us. I think they can't see us, but they can hear us. I think. I don't know. It's very confusing. This appears
It
to
still
be.
says waiting my show. Like it doesn't even say like it's going.
got
Yeah,
it.
it's not on our side, guys.
Yeah,
I just want to let you know.
YouTube is
It's on
messing up.
YouTube.
This appears to be a YouTube issue. It's the first time I can remember this happening. So just keep refreshing. I said it in the chat. Keep refreshing, and eventually it will show up because it showed up for me. So that's all I can say. Anyway,
It's good to see this many people are concerned now.
they're concerned for our safety. I think they're concerned that we got swallowed up by the metaverse.
The metaverse got us.
We haven't talked metaverse in a while.
So anyway, as far as stocks moving, right? GameStop, AMC are the obvious ones, but Dennis mentioned the pot stocks. Okay, so
There's
Tilray
news
really
though.
left
There's
it.
news on
Tilray.
the pot stocks.
Well, there's news on the but that's not going to justify what's happening to these stocks. So Tilray, Sundial, SNDL is a big one. Aurora, ACB is a big one. Those
All the high short
Canopy,
interest stuff, Joel.
yeah.
Again.
Yeah, I mean, yeah, you call.
This all
I mean, we
moves
know
together.
it. Yeah. I'll just say, look at your pre-market highs on these and use those as potential targets. And if they get through those, then they just keep on going. But just flipping through the charts there, it seems to be a little bit of the euphoria is left off. I wouldn't, I'm not buying them. I'm not shorting them. I'll have them on my screen for, for the show, and then they're off my screen. I mean,
full disclosure, I've bought a few, and none of the stocks that I've named, but I've bought a few of these dash for trash stocks for trades. So I won't say the ones I've bought because I don't want to influence them. But I'm in a few of these.
You're pretty good at sniffing these out. In this one,
well, there's like 40 or 50 of them that all kind of move together. I'm relationship based. I see GameStop trading up 12%, 15 points. I think eventually they might roll into other stuff. I do think that the SP rollover here this morning, that's absolutely what's happening last night before we started rolling over on the S&P. So it all depends. I mean, if we still start getting ugly, have an ugly day in the markets, then that trade won't work out. But if the S&Ps go to turn, those dash for trash stocks probably will lead the charge. So, but keep an eye on GameStop. It's your leader. GameStop and AMC. If they roll over and give it back, then that trade is not going to work out. I'm relationship based. I know there's a relationship between GameStop and a lot of those other high short interest names. So that's why I'm long a few of them.
I just want to know, what do you call that grouping? Do you have it under like trash?
Yeah, trash.
Is it your trash file?
Trash. Yeah, I should start that ETF, the trash ETF. And you just put all these trash names in there. And every once in a while they get these short squeezes that rip your face off, and impressive, most of them.
And I think I have a symbol for you. Let me see if it's taken. No, it's not taken.
What is it?
Junk.
Junk's taken.
Junk has to be like a junk bond ETF. It's got to
be.
It's not, though. It says it's there. How's that not taken?
Could you? Who's the guy that?
Because you know what is it? Because it's JNK.
Man, we should scoop that up.
Did you get that right now?
We're going to start it. GameStop would be the biggest position in the junk one. And the stocks go. I mean, they're not always junk. Sometimes junk is hot. And then you got to do the what will be the inverse of that?
They're not junk. Guys, they're not junk. They're high yield. That was a bond joke.
None of these things have high yields.
that was
a bad joke. None of these things have yields at all. Crickets on that one, buddy. Sorry.
What would you? But if jump, but what would be the opposite? Like if of it, I guess it'd be the SPY, right? If you wanted to. do a relation, the opposite. But all right, we've digressed with my junk one.
I have two things to add on this. Number one, if Dennis is correct and the high short interest goes into play today, I'm going to drop you guys a list, a free list of high short interest stocks and I'm going to put the link in the chat right now with the caveat, the short interest data on that list on most places is outdated. Why? Because it lags, and the next reporting date, the next FINRA reporting date is tomorrow. Okay, so
what a convenient time.
All the short interest data that we have, whether it's from S3 is proprietary, they have their own stuff, but most of the data that's out there, the data that's from FINRA is 2 weeks old by now. But there's going to be new data reported tomorrow. So know that going in. But I just dropped the link in the chat. It's highshortinterest.com. If Dennis is correct and all the high short interest stocks start going today, look at that list.
GameStop's your leader. That stuff, if GameStop rolls over, that list isn't going to work. If GameStop, opens and continues ripping, that list probably works. So this is a binary bet. Yeah, and it's all dependent on where GameStop goes from here. Man, it's crazy when GameStop's one of your leaders, Joel.
Yeah,
what a world we're in. Okay, let's talk real stocks. So you got Adobe getting hit.
Adobe leads the earnings here, so we can probably go there next.
Sure.
Yeah, it's your biggest one. Wait, did I mention, by the way, that what Ryan Cohen actually bought? He bought 100,000 shares. So
100,000 shares.
It wasn't even that much. And he's got like 9 million. So it wasn't.
He has 9 million shares, or $9 million worth.
9 million shares. The float's not that big.
Oh my gosh.
He's never sold any?
Has he ever sold any?
I don't think so.
Well, that's crazy in itself, and that thing was going parabolic.
All right, Adobe earnings last night. Kind of your biggest earnings name overnight here. In the pro, I see my Adobe EPS came in a couple cents above the estimate, $3.37 versus $3.34. Sales beat by a smidgen as well, about $4.25 billion. I think their guidance came in a smidge on the light side. Let me see here. Yeah, the guidance was for revenue for the year came in around $4.34 billion, which I guess was in line or maybe a smidgen light. But I don't know. This seems like like a boring report to me, actually. I don't know.
I was just trying to bring up Adobe and I accidentally typed it in the chat. I was trying to type it in my montage. Take a look at it. I mean, we're in this market where buy the dip is working again, and you can't deny that. I mean, we talked about FedEx on its disappointing earnings report. 3 days later, gets all the losses back. We talked about Boeing on the plane crash. 3 days later, gets its losses back. I got down and dirty in Okta yesterday because I was like, you know what? I sensed the pattern. It's buy the dip is back. I bought it at 156. It was 169. I was literally up 8%. It's given it back now, some of it, but I mean that one worked too, to a certain extent. It's down today. I'm not sure. Maybe there's some more stuff said about it. Adobe down $15 on an earnings report. Money managers. He's got to envision why this is working, because there's multiple people, including myself, that didn't participate nearly enough in this rip your face off rally, and they're sitting with too much cash, including myself. So money managers that are sitting with too much cash are looking for dips to buy. So when you get an earnings dip on a company that usually moves with the overall market, they're using that opportunity to redeploy their cash. So when you see Adobe down $15 in a market that is now so inclined to be buying dips, that's why we're bouncing back. Money managers trying to redeploy those cash assets and using those earnings dips to get some money back to work.
I don't have as good a fit, like sometimes, I'm like, I look at this and I'm like, yeah, buyers are stepping up. We're not going to see the pre-market low. I don't know. Since you had that rebound, and that was probably the 8 o'clock print, that ridiculous print at 455, it just feels like there's selling pressure. Let me see what the pre-market low is here. Because I did the 50% retracement of the move that you had. Pre-market low, 41.74. So if I was going to step into this one today, I'd have to wait closer to the pre-market low. I mean, right now someone's hanging on at 450, but it just seems like it had that pop, the drop, the pop, and now you got some serious
Leaking
sellers down
again.
there.
S&P's hurting it again.
Yep.
If the S&P's rebound, it's right now money managers are scrambling. There literally is a lot of people who believe that the bottom is in. I'm on the fence. I can see two scenarios. I've outlined those almost every show. It's all around the ceasefire. Ceasefire comes in, we're at all-time highs. I think if the ceasefire comes in, we're bouncing back to all-time highs. If this continues to go and escalate, more things happen in Ukraine, inflation doesn't get in check, then we could revisit those lows. So it's kind of, that's why I'm like, I'm kind of 50-50 on my long-term stuff right now. And, some people just say just hold and don't look, but that's my job. I'm a market timer. So, it's kind of boring if you just sit there and just hold stocks forever and don't trade them. I mean, this is what I do. So I feel like I have an edge by, reading headlines and feeling out, where the market is. And sometimes you're right, sometimes you're wrong. And definitely right for, selling when I did, because I obviously raised cash near the highs. But I mean, I was wrong for not getting back in last week. So I'm scrambling too, man. That's why I bought some Octa. I mean, I'm scrambling, doing the same thing the money managers, getting the dips, looking at redeploying some cash.
If you got a money manager now and he's looking to buy dips up here,
but this dips, but I'm not talking.
I mean, individual stocks.
Yeah, this is how you do it. Like, you rebuild your portfolio through the individual dips, because those things catch up. If the market's going back to new all-time highs, in all likelihood, Adobe's going to be a hell of a lot higher than 452. So you're like, well, I'm not going to get better than a 0.4% dip on SPY, but I'm sitting here looking at a 3-4% dip on Adobe. I'll strike. That's why these stocks are bouncing back. That's why buy the dip is working here again. That's why Boeing, in a normalized market, should not bounce back in 3 days from that plane crash, but it did, because there's money managers who are underinvested saying, oh, here's an opportunity to put some cash to work. Think about what the big money is doing. Think about how they're positioned. That is what moves stocks. It's not your little retail guys, unless it's GameStop. It's what's the big money doing. And big money goes into GameStop too. Don't kid yourself. I mean, I traded for crying out loud on that headline last night. Like, we're going to disclose Ryan Cohen just bought stocks. Probably going up.
Time out. Did you just call yourself big money?
Yeah,
No,
you did.
I said even me.
I know.
You guys think what big money's doing, but I'm saying even I was trading this last night. Not that I'm saying I'm big money.
No, I know.
I have an edge, and I've given this rant before too. You as a retail trader have an enormous edge over big money, because when they're coming into a stock, sometimes it takes them days to go in. They have what's called price impact. You want to buy like 500,000 shares of this stock? Okay, we got to slowly work it. You got the Joe Saluzzi's at Themis Trading that will work those orders and try to get that money in. But as you buy stock, it pushes the price higher, because you're buying, you're actively coming in there and buying stock. So I mean, you as a retail investor have a huge edge by being small, because you can get in and out. You got the big fish that moves so slow to get in. Well, you can go in and out and in and out and in and out. That's your edge as a big trader. That is your edge. So keep that in mind. You have the biggest edge, and that's my edge too. I'm a little guy, I can swim in between the big fish and move my money in and out. Easy to buy 500, 1,000 shares of something. Buying 1 million shares of something, not as easy. You got to work those orders.
And then if you don't get your original price, then you got to adjust, and that's why you see, these stocks, put in a pair of lows or something, have a little bit of rally, and then the big money I'm not going to buy this at 460. I'm gonna buy it at 465, and then they wait. They don't change. Oh, I got to buy 1 million, get it done. I mean, sometimes you get those orders, but you can affect the market too much. But
and I mean, know this too, Joel, because you worked big orders when you were at Oldie. You were working institutional orders. You were working big orders like that, and Joel, no, like you're working it. You're trying to, not move the price. It's 100 shares is a joke. I mean, and that's why they say this is a retail market, because you can get in and out of 100 shares so easy. You get in and out of 500 shares easy. When you're working 200, 300, 500,000 share orders as an institutional trader, and I've never been an institutional trader, but we know a lot of them, and we're obviously going to have Jonathan Corpina coming on here too, and he knows a lot of these too. It's a completely different animal. So you have a huge edge as a small fish moving in and out of those big, where the big fish is moving price. You can move in and out multiple times in those days. So use that edge. And, if you don't like the setup, sell, rebuy, because your price impact is minimal as a small trader.
You want to know what the best edge ever is? Having no benchmark. Boom!
That's true too. I don't even know my percentage return. I mean, I don't have to know a benchmark. Like people say, what's your annualized return? I have no idea. I'm a prop trader. I have no idea what it is. I know I do pretty good. I know what I make on an average month from an absolute dollar value, but I have no idea what I'm doing on a percent basis. Zero idea. So, and you know what? That's a good thing. I don't have to know that. I just have to pay the bills.
We're still having problems with the stream, huh?
We are, but fortunately for us, we are live on Twitter, on Twitch. We're even live on Facebook. So people that are watching there are okay. Hello, everyone watching over there. We see that you're doing good. So glad you could join us on not YouTube today, because YouTube appears to be having some serious problems for a lot of people. I don't know what's going on, but hey, that's the way it is. Maybe a short Google. I don't know what to tell you. Let's stick with the earnings front for now, because we have a couple more. Then we want to bring on Jonathan. We have General Mills this morning. This is a great way to play inflation, I would think. General Mills, food stock, earnings beat. Sales came in a little bit above estimates, but they raised their guidance, their organic sales growth guidance for the year, probably on the back of just price increases, I would presume.
Big move for GIS, breaking out. Yeah. Ugh, boy, oh boy.
You're getting back, and it's been down. This is not the kind of stock that, it's like, oh yeah, this is, I don't know. This is not the kind of stock that, I guess you've had a dip here the last little bit, and obviously, the dip buyers are rewarded here with the earnings report, but this is not the kind of stock right now that I'm interested in.
I'll give you, if we keep on going, to give you an upside target here, 65.39. I'd be more interested if it came back down into this area here, and the way General Mills trades, it very well could, because you had 5-6 tops right here around the 63.50 area. So I'd rather try and pick it up on a retreat to that area than, I mean, you could short it or sell it at 65.39. That was a daily high. But after that, wow, really, really opens up on the upside. But this is a very big move for General Mills, so just be aware of that if you're looking for the same to go up, a lot farther.
A couple other earnings reports, stocks just trading down this morning. Poshmark, POSH, and what was the other one again? GAN, G-A-N. Those two.
I had not looked at GAN in so long. Look at that.
Yeah.
Holy Toledo. Wow.
I know. Well, Posh has gone from 104 to 12 now, and GAN has gone from, how high did GAN get?
But Joel, everybody in my stream telling me the huge rally in GAN the last 5 days from 460 to 550. You're talking about a 25% rally in 6 days. I missed it. I can't believe I missed that huge rally. And that's what they all look like. And you're exactly right. If you were sitting on a desert island and you were looking at stocks in November, and now you're looking at all these retail-driven darlings now, and you're like, you're not coming in and saying you missed it. You're kind of saying, what the hell happened to my stock? So, I mean, that's where we're at. But, everybody wants to make every move, and it was a big move last week. But giving it perspective here, even ARKK, I mean, it's $66. In November, it was 120. It's basically been cut in half still, despite the beautiful 20% rally last week.
Yeah, but it's
where we're at.
Yeah, I mean, but we've rallied so far. I'm just kidding. Yeah, I don't know. I mean, it's also like, this is what happens when you get smaller numbers, right? Lower numbers. It's easy for a stock to rip up 50% when the stock is a $2 stock, right? It only has to go up $1.
For sure.
For sure. But on the charts though, it looks big. Like, even I caught myself last night because I was looking at like Tilray, and I was like, "Whoa, look at that! Oh my!" And then I was like, "Wait a minute, that's up like $1." Do I care about $1? I mean, I do.
Not if you bought at 300.
Right, obviously. But
Yeah, all-time high Tilray, $300.
Yeah.
That's FOMO right there.
Yes, sir.
We joke about FOMO here. That was FOMO.
On the
Holy.
yes, sir. Last earnings stock from overnight or this morning here is going to be Winnebago. WGO EPS beat, sales beat, stock super quiet this morning. But
gas killing it. Yeah, gas prices.
I think going forward, this is a really tough play for exactly that reason. I mean, boats, Winnebagos. I mean, when you're looking at gas as high as it is right now, and you've got a reopening economy, people, as much as they wanted to buy Winnebagos a year and a half ago because we're all staying outside and staying away from people want to go near people. That's one thing working against it, and the gas prices are working against it too. So I'm not a fan of this right now. Winnebago.
It's kind of been all over the place, but if you want to fade us and you say, hey, people are going to be, Winnebagos are going to be back here. You had what you have. You had like a 6-point move. So this 59.5 area would be an area of interest. Just on a pullback, you got down to 59, and you got a little bit of a pop. So that's what I'd be looking. I mean, it's actually holding up pretty well, only down 39 cents and. I mean, if you really want to try and take a stab at it, yesterday's low was 59.91. You're still, $2 away from that if you want to try and buy the previous day's low. On the upside, keep an eye if they decide to rally this thing for some reason. Just keep an eye over 62. It's gotten over 62 3 times since March 7th, and those rallies have gotten stuffed. Man, we're right there. I don't know what they're going to do with Winnebago here. This is a tough one.
Fundamentally, I don't like it, but technically anything can happen.
Yeah, exactly.
And this is a market where, it's a tough market to call. So we can give opinions and, we can, make guesses, and that's all it is just making guesses. But this is a very, very difficult market to call day to day. It's easy to call, like, a trade like GameStop last night where I'm buying off of a Cohen, like that's a headline. It's probably going to go up on that. It did. The trade's over. Where it goes from here, now that's the question mark. So it's very, like I said, it's not that hard to call it, a minute out, but it's really hard to call it a day out. And calling it a year out, whatever. Who knows where we're going to be in a year? Yeah. So, everybody thinks the market just goes higher, and that might be the case unless you're in Japan, and then that wasn't the case. So lots of things to consider.
God, enough with the now do Japan. Everyone does that. Now do Japan. It's been
down for 30 years.
I understand.
So, I mean, we're just throwing a hole into the thesis the market has to go up forever. That's all.
All right. You know what? It's 8:33, and I see that our guest is here. So let's bring him on right now. Why don't we? Jonathan Corpina. It's been too long since we've had him on the show. He's a senior managing partner at Meridian Equity Partners, and very excited. It's been too long for Jonathan. So Jonathan, good morning. Welcome back. How we doing? How you feeling? Oh, you're on mute though. Just click that mute button right on your screen there, and that should.
There we go. See, I'm rusty. I haven't been on in a while.
I know. How we doing, man?
Good. I feel great. Happy to be back. Slowly getting myself back into the routine. So happy to be joining you guys.
Excellent. So, tell us why we are doing what we're doing. You have 30 seconds.
Yeah, you guys been talking about this for way too long. No, I mean, look at the market and look at where we were and where we're coming to. And I think what's happening is that investors, whether they're right or wrong, are kind of insulating themselves from the headlines that are out there and are trying to time the bottom, trying to time missed opportunities per se, and make sure that they are participating in this. So as you guys are talking about on the lead in, and I think Spencer, that was you speaking, you're 50-50 as to where this market is going to go, right? We're on the brink of a all-out World War III. Market going to implode from that. All of a sudden, if we get by miracle, we get some ceasefire, market's going to rally from there. I think investors are trying to play both sides of this. We've seen this market rally off the lows. And what I think was interesting was last week, really good, strong market activity as we got to the end of the week. Weekends have normally been this soft period, right? Investors digest information, news headlines circulate and recirculate over the weekend, and we start to get soft coming into the week. we were soft on Monday, but not that soft, right? We sold off a little bit. No real panic, no real fear of anything that occurred again. And then yesterday we come in and rally again. So some of this might be false, and I'll kind of draw an analogy here. I was taking a walk with my wife the other day, and you look out, and here in New York, we've had a kind of rough winter, and now we have these little few days of spring, and you could see a tulip bulb starting to pop up out of the bed, and you look at it and go, us here, and then you look at the 10-day forecast. We have 3 days of 80-degree weather coming up. So it's 2 steps forward, 1 step back. Same thing in the market. It seems like we're trying progress here, but we're ignoring the potential headlines that are ahead. And when you evaluate this situation that's going on with Russia and Ukraine, and this is what's dictating our market now. We could talk about Fed and fundamentals, but that's what's dictating our market right now. The uncertainty of what Vladimir Putin will do or can do is really going to weigh on this market, right? The more pressure that's on him, the more he feels that he's backed into a corner. He could do anything, and I think that uncertainty is really what's going to keep this market from moving higher. S&P broke through 4,500, a level we haven't seen in quite some time. We're going to get a pull back off of that, as we should. You can't have the movement in the market that we saw last week and this week without some sort of pullback. But it's going to be interesting to see what gets us over that level again. It's going to take a little bit of time, but to get back over that level again is going to be important.
So that one level, that's sort of your bogey. That's
Yeah.
that's what everything is resting on.
From a psychological level, if you're looking at that, that's something that's there. I mean, my resistance level is way higher. Is way higher on this, up by like 45, 80 if you're looking at a 6-month chart. But I just don't think we're strong enough to stay above that for now. But for a psychological level, I think investors will look at that. You saw some headlines come through yesterday, S&P above 4,500. I think also important to look at is VIX. Look at where the VIX has been. Obviously, tremendous amount of volatility there, trading as high as 36 recently, getting as low as 22, 23 yesterday. I know we've talked about in the past that 20 level has always been that comfort zone for investors, probably adjusted, inflation adjusted 20 to 2020 at this point. But trying to stay within here, I think, is going to be important in the VIX.
Jonathan, everyone tries to make analogies in this market and like what period does this replicate? And you had the tech bubble in 99, you had, the financial crisis in 2008, you had COVID. It just seems to me here that, man, this is like a new ball of wax here. I mean, all the different factors that are going on with the war, with inflation. I mean, can you draw a parallel with this one? Because they're just, to me, it's like I go in my playbook here or my stock trader's almanac, and there's nothing there. What would you compare the recent market environment to?
Yeah, Joel, I in this one. I mean, look at the things you just tried to compare it to. Those were all, and COVID's in a category, but the other analogies, those were all within our borders, right? The financial crisis, those were things that we took responsibility for, could take blame for, had control over. We're watching a war unfold in front of us on our TV screens, where we still are unsure where we play into this. What's our part, if we have a part? And I think that's what's different in this category. Getting involved in a scenario where you've got 2 countries who are going head to head, battling each other, and what our responsibility, NATO's responsibility. How do we get pulled into this? Our president has expressed his concerns about bringing troops in and getting more involved. But at some point, if this continues to escalate, I don't think, unfortunately, that we and other countries are going to have to sit by and watch. And I think that's where this trepidation is. So what analogy can you draw that to? I mean, I'll go way back to Vietnam, but that was way before my time. And, we all know how the history books played that one out. But from this point of view, this is uncharted territory. But we can't forget about, there's 2 races that we're running here. We've got our Russia-Ukraine potential, war and our involvement there. And then we have to continue to worry about what's going on here, inflation, Fed, basic fundamentals of our market. Our economy still rebounding from COVID. So these things are still occurring. We can't forget about that. So we're trying to run this parallel race here, and that's why we see our market continue to shift the way it is. Because all of a sudden you've got 5 straight-ish of green activity on your screen, and investors start thinking, oh wow, everything's great. And now you continue to watch headlines that come out on our screens, and we're saying, wait a second, we still have this rough that's going on over there. We still have our interest rate concerns and conversations. Inflation, everyday Main Street Americans are seeing the impact of inflation in their laps immediately. So that too is a major concern that we continue to see. So all these things bundled together still have it all have us all worked up over this market. But Joel, this is not something that we've really group it all together. It's not really something that we've traded through before.
Yeah, that's the way I feel too. And I know you have we were talking about the big money and institutional traders, and you're obviously helping them execute and navigate this market. Like what are I'm just curious, like like the conversations. I mean, obviously you're no one's a war expert, and there's all these different things. I mean, does it say buy me 250K, but if a nuclear bomb goes off, cancel the order. I mean,
Right.
what are what are the? I mean, these are tough conversations, and
They
because
are.
the news and the news flow, what they want to do before the open, could drastically. I mean, a lot of things have been happening overnight. I just wondered, what these conversations are, with the institutional traders and the big money. To me, it seems like, up until that burst we had, they're really willing to sell rallies, and we got a big rally now. So just wanted to see what kind of feedback you were getting from
Yeah, I
your
think,
clients.
Joel, I think from like a macro conceptual point of view from portfolio management, dispersing money into the market, whether they're buying or selling, that strategy is still there, right? And investing in companies is still there. It's just a question of price, right? We've seen a lot of volatility in many stocks and many sectors. There's becoming a little bit more price sensitive when buying stock, just because the fact that you could have a large potential buyer in a stock, and they want to participate, they want to get involved, but the price swings very quickly can move that down 1%, 2% over a headline. So the concept of make sure you hold on to some just in case is always something that we're talking about. Having something in your hand just in case a headline comes out and swings this market. If you're a buyer, it swings and you're able to participate. But then also what happens conversely is as markets, get swooped up with everything and all of a sudden stock starts trading higher, you're starting to play catch up. So conceptually, I think these are opportunities for portfolio managers to get involved in stocks and be able to average down in some cases, or get entry levels in some cases where they want to get involved. But the conviction of I want to buy it now, or I want to sell it now, you just don't feel that, because these stocks can change on a dime for no correlated reason.
Jonathan, have you noticed a change in the last week? Because if we go back, and let's take us back to last Monday when the markets were near the lows and we had the death cross in the S&P, and JP Morgan was thrown in the towel and all the Chinese names. Now we're 7 days later and we've rallied significantly since then. Have you noticed a change in, sentiment from your institutional customers?
Yes, and the sentiment change is when that market turns. There's no panic to get back involved and panic to participate. It's more of, okay, let's watch this market trade higher, as opposed to when you have the headlines that are hitting the markets, there is that panic that we need to take some money off the table here, whether it's at a profit or a loss. So getting back into the game, there's not that urgency to get back into the game. And that's why I think we're going to start to see a little bit of a pullback here, because there's no urgency to buy this market. There's more of an urgency to sell this market when those headlines are out there.
That's interesting. At the end of the day, they're slaves to price like anyone else. Everyone is a slave to price.
We're all slaves to
Yeah,
price.
all slaves
Yeah. right?
Yes.
And we're slaves to this tape,
Yeah.
and FOMO of stocks moving and sectors moving, and all of a sudden you look at the headlines of the day at the end of the day, and you find no positive headlines, yet the market's up 1%, and then you just shake your head and go, "What's going on here?" So these moves, albeit what we've seen in the last week, are good for your portfolios, but having a pullback, having 2 steps forward, 1 step back is going to be healthy for a market. We need to bring some reality into play here.
How about the whole, interest rate environment and, the position, what the Fed is doing, being behind the 8 ball with the transitory speak. And then to me, going the other way last time, getting extremely hawkish, throwing a lot of different scenarios out there. And then you get people going all the way to saying, well, they're gonna, from not raising interest rates fast enough, they're gonna raise them too much, and we're gonna go into a recession. I mean, to me, the market seems very confused, and just as far as like the Fed, and right, the market can go up in a rising rate environment. It's not historically, we haven't seen that, but
Right.
just give us your rate, your view on rates, short
Yeah.
term and long term, and impact on the market.
Yeah, listen, I think we all can agree that interest rates were brought down for a reason to help our economy, and that's what the Fed's job was to do. Whether they kept them there too long or not long enough, we can go back and forth on that. At some point, rates, and we've seen it, are going to have to move higher. What is the pace in which they do that? It's very hard to trade off of that, right? Because there's 2 camps that are here, and the Fed has all the cards. They keep them close to their chest. They let out information, or they let some sort of sentiment out that they think might help. But at the end of the day, they're going to be dictated by what's going on globally, right? So if we go back to 2 months, 2.5 months, 3 months, when is the Fed raising rates? And then all of a sudden we've got this Russia-Ukraine crisis. That kind of caused them a pause in their mind, in their playbook, as to how they're going to move forward. They were pretty much committed to what they've done recently, but it's going to be interesting to see the longer this plays out, the impact on inflation, the impact on reopening our economy, global, nationally and globally. That impact there, I think they're going to have to play this one out and keep this close to their chest. And also keep in mind, as this year plays out, right, we're finishing up the first quarter here. Midterm elections are coming up. You could say what you want about the Fed. There are policies and politics that play into that. So as we get closer towards, the end of the second quarter, beginning of the third quarter, that play might come into effect. Very difficult to trade the way the Fed is thinking. When we have these days when comments are coming out, when Fed decisions are coming out, we just watch the volatility. You watch the algos swoop in and swoop out. They read the headlines, volume evaporates, and then comes back into the market in due time. So it's hard to really play that trade there, but it's something that you clearly have to take into play.
How do you navigate around? And I mean, you've been in the markets a long time. I have as well. But I mean, we're such an algorithmic trading environment right now, and it seems like everything out there is just navigating around the algorithms. How do you work like institutional orders around all these algos?
Kind of goes back to what I said before, where you've got clients who want to participate in stocks and they're price conscious. You have to know your stocks, you have to know your levels, and you have to watch the volume, right? You could see stocks trade up and down on very little volume and depth of market. It's very quick. Orders are coming in and out, but you're able to get a sense of stocks that kind of swing, and once they hit volume levels and price levels, they kind of maintain and sustain those levels and then swing back down. So I think it's more of, for us being able to have these conversations with our clients when we say stocks are trading up, 0.5% to 0.75% on no volume. Customers want price and they want volume. If the volume's not there, you can't substantiate going along with that type of volume. You might be wrong, right? Other algos might playing leapfrog and snowball, and next thing you know, the stock's trading a point or two higher. But you have to know your stocks. You have to know your levels. every stock, and I don't have to explain this to you guys, has its own characteristics in the way that they handle situations. Have to keep in mind that if this algo participation is moving a stock to an area, to a price that you feel isn't the right price, you're probably going to be right most of the time.
Sorry, Joe, go ahead.
Let me sneak one more in here.
Yeah.
And I was just, because you have a variety of different clients here, and you're obviously getting buy and sell orders and a preponderance of, one each way. Do you ever get like an easy thing like across, like, if someone's coming in to, buy a 250,000, someone wants to sell a 250,000, or is it pretty much, these guys are, pretty much on the same side. They're looking to buy the dips and sell the rips and things like that. I was just wondering, and if you do get that, if you do get the preponderance of one side, does it signal to you a turn in the market?
So crosses is few and far between, right? The planets have to be aligned with that, right? Because you need contra interest, same stock, and same instructions, right? You might get 250 to buy VWAP over the day, but you might get 250 for sell. I'd sell it in line here, so you can't really cross that stock. So planets lining up for crosses, it does occur. We do see it, but it's not a very pedestrian part of the order flow that we see. What we do see, like you said, is, you look at our blotter screens at certain points during the day and you don't look at the market. And if you just, turn your screen on, you can get a sense of what's going on based off of the order flow that we see coming through, right? Because it all feeds off each other, right? And it kind of goes back to that whole algo premise. When the market starts trading up, algos start kicking in, fear of missing out starts kicking in, and then participation starts to occur. So you start to see these swings in the market, probably inflated both to the upside and the downside. But you could tell from the order flow that we see where the overall sentiment is. Not that the sentiment is always right, but you can get a sense of, at these levels here, participation level has escalated from participation levels at higher prices when you're talking about overall market activity.
Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, it is a pleasure to have you back on. We'll have you on again soon. Thanks a lot.
Gentlemen, have a great day. Thanks for your time.
All right, guys, let's talk about Tesla right now. We just rallied from how low did we get?
Crazy.
750, 756 to just about 1,000 in the span of what, 2 weeks?
Yeah.
A week and change.
2 weeks. Try 6 days.
6 days. It's all 6 days. All these rallies are 6 or 7 days.
All right, fine.
They're incredible rallies. It was incredible moves last week. And again, it's because sentiment just got so poor. But look again, Tesla. We talked about these little double bottoms. Look what it did. You're going from the 14th and the 15th, the 2 days right there. On the 14th, 756.04. On the 15th, 756.57. Joel and I have looked for that stuff, from a swing trading perspective for a long time. Get two lows in the same area, and then they reverse off it, and then it starts going, and then the FOMO starts kicking in, and boom, 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 and all of a sudden you just kissed $1,000. Mitch with a good call in the pre-market show. He's like, got to think there's going to be resistance at those 4 digits, and I think so too. Got up there yesterday, kissed it, pulling back from it now. But I think, 1,000. If you're coming in now buying Tesla, really late to the party.
Anything to add on that, Joel, or no? No.
I would, if you think you're going for more on, yesterday's low was at 921.75. If you do get some kind of pop here, I don't know if you're going to see the close. I think you have to pick an intermediate level. If I was trying to exit this thing from a long, I wouldn't be out there at the close at 93.98. I'd be out there at like 85.90, something like that. If you get one, stupid buyer or something that swoops it up, but it's definitely turned, and it's really hard to find. I mean, I can't give you any good support in here. Yesterday's low is way down at 921.75, and I'm sure no one wants to lean on that for like a swing trade or to try a long. We're continuing to leak here.
Is there any other headline here?
Yeah, I
like
was just
from
going to ask.
Ukraine? Spencer,
Not
Joel,
that I've
like
No,
seen.
I'm not
Not
seeing
that I've
anything.
seen all morning. I mean, Powell is speaking, but let's be clear about that. He's speaking right now, and there's I think 6 Fed speakers speaking today.
They're all
So,
going to say the same thing.
yeah, but Powell is actually speaking right now. He's speaking at some
Or there you go.
innovation summit. I can drop the link if you guys want to check that out. But I mean, we all know what he's going to repeat more or less what he said last week. So and the other day as well. But he's been speaking for the last half hour or more. So it could be that whatever he's saying. I don't know.
definitely putting a trash or a damper on the dash for trash. GameStop is giving back half of the gains
I was going
now.
to say the 815.
Yeah.
AMC is almost giving it all back. Bed Bath and Beyond is literally only up 8 cents after being up like 7-8% last night. Let's bring up BBBY because Cohen owned BBBY too.
Yeah,
That's
he's
other
the one
stock?
that moved it before.
That's his other stock, right? So you'd think like that you get
Chewy.
I get the sympathy
No,
move, but look last night.
He didn't own Bed Bath.
Isn't he
Yeah,
in
he
Bed
did.
Bath?
Who was it that made the huge
Who,
buy
they,
in Bed
who
Bath?
made it move there the other day?
Yeah,
when
that
it,
was
when
Ryan
it
Cohen.
jumped. Who was
that
it?
him? You know what? Yeah. Sorry,
It
you're right.
was,
Yeah.
yeah.
He's the one that made it go from 16 to 30 in like
Yeah,
an
Yeah,
hour,
one day.
in like a minute.
going back in my pro because
Yeah.
my memory. But wait a minute.
So I mean, the meme stock is rally is leaking here to a certain extent. Obviously, it's the S&Ps that are putting a damper on it because, as you know, those stirs and people start selling stocks all around. So we'll keep an eye. Keep an eye on GameStop as your leader, Bed Bath and Beyond, and see if you're trading any of those stocks.
Yeah, he's the one that sent the letter. That's what he did. He sent the letter to the CEO or to the board saying,
The boy's got some power.
Yeah. He said you guys should spin something off. This is basically what he said. So, I forgot all about that. Well,
Spin off a couple of those aisles that there's huge stores is what they should do.
Me and Joel don't like the story.
What was I going to say?
And
forgot.
they're empty. I went in there a couple weeks ago, and like they used to have all that food that they were selling. Nothing but like towels, more towels. Just what everyone needs. You can steal them from a hotel. I mean, why would you go to Bed Bath and Beyond and buy them?
One last thing with regards to Tesla, the Berlin factory opened yesterday. Sometimes we do talk about events being sell the news types of thing. You buy the rumor, sell the news. So maybe that is your topping catalyst here, but remains to be seen on Tesla. Were there other tickers in the chat? I know there were that I.
Let's do some ticker time. We have 3 minutes. Go.
Yeah. Okay.
Pound them out.
Salesforce for Sharif. Salesforce.
Haven't looked at it for a little bit. I mean, we've had a pretty good rally. You know, we've had 3-4 days of consolidation here too in some of these tech names. So big important day. Big important day. I would say you need to hold yesterday's low, which is 212.61. As long as you hold that low, and obviously I'd look, as a potential for a double bottom there. So, you see if it comes in and if it can bounce at yesterday's low. But that's what you want on most of these tech names. You want to see them hold yesterday's low. We're getting some weakness here. Can they bounce at yesterday's low? If they can, that's good news. If they can't, Katie bar the door.
I'll take the opposite end of this one and just say get me anywhere near 222. I mean, what was the high from yesterday? 2185. Did have a seller at 220. You back here at 222. Palms out. This thing's heading lower until you take out that 222 and close above it.
Let's go for. All right, we have to talk about Alibaba every day now. So how's that doing this morning?
Yeah.
Oh,
Up again.
well, yeah, but not in the last couple hours. It's not. So, it's given.
Baidu's gone red. The big rally has happened here, folks. The money was made. The stock has went from $73 to $120 almost. What is that? 73, like 75% in 6 trading sessions. Stock's up 75% in 6 trading sessions, coming in all this congestion in the 120 area. It's where I said yesterday, I was like, I think there's room to 120. I still think there's room to 120, but at the 118, that's pretty much close enough. You're right in the whole area of congestion from December, January, and February. It's not easy sledding anymore.
Look at this 4 a.m. open, Dennis. You could have it got out to 1979.
Kiss the 120, eh?
Yeah, and then
Sell those big levels.
Look at that, man. And then you got a daily high right here at that was a little bit above it, but nothing but a step down seller here since that 4. I mean, someone's just like they probably want to get out average price at like 116, 117. They're like, this is at 119.50. let's just walk this puppy down, and that's exactly what they did. Not red on the session, but I'd look at the close as support at 114.99, and after that, whew, I don't know, long way to go on the downside on this one.
Let's keep an eye on Nielsen today and LSN. It got to 26 last night. There are reports that Elliott Management could increase their offer for the company, so we'll see about that. But NLSN,
we called that. We said that Monday when it was down 18%.
Maybe in play here, maybe not. Remains to be seen. But
it was a gift. Monday move was a gift. When that thing was trading $20, I was hoping it'd come a little bit lower, and get like 19, but $20 it was coming in the pre-market, and it opened at 20.43. It opened at the very low tick and went straight up, and everybody's saying this isn't over yet. So that was a gift. Monday was a gift, and obviously, we got the Elliott news or the potential from Bloomberg that they might raise the bid. That might happen. I think stock's still in play, so I wouldn't want to be short it.
All right, guys. All right, you finish up. Hop. I'll talk to y'all later on. Have a good day.
We're done. I mentioned this yesterday. I'm going to say it again today. A bit of a different programming day for us here on Benzinga Live today. Not doing live trading, not doing Benzinga Live. We're doing our monthly boot camp. This is a monthly show we've been doing on the weekends every month for like the last year. But today is the first time we're going to do it during the weekday. So our boot camp is going to start right now. We have a full day of like hour-long educational sessions about trading, technicals, fundamentals. We've gathered together some of the smartest people that we know in our circles: Anne-Marie Band, Mark Petrino, Gianni DePoci, and others. That stream is starting right now. So I'm going to end this show, redirect to our boot camp. That's going to go live until about 3:15 today, at which point we'll resume with the normal shows. So stay tuned for that, guys. Smash that like button. Subscribe to Benzinga on YouTube. We appreciate that. And I'm going to end this show, and I will see you over on the Benzinga boot camp. Leading us off here today is going to be Mark Petrino, who is the head of our trading school. So see you guys over there. Smash that like. And good luck today.